Hello everyone, my name is Aaron Glossop. I'm the Senior Stakeholder Engagement Advisor at SAPLSL. I think I said that right. My mouth hasn't been working very well today, as I shared that with Mandy earlier. That's what happens when you have a few weeks off and you come back and you don't know what the hell's going on. So thanks for joining us today, everyone. I'd like to begin by acknowledging the traditional owners of the land on which we meet today. And today I'm on Kaurna land and I pay my respects to the Kaurna people and also pay my respects to elders past, present and emerging. And I extend that respect to all Aboriginal and Torres Strait Islander people with us today. Today's session is all about helping you confidently complete and submit your quarterly return for the Portable Long Service Leave scheme. We scheduled this event in, if you can just keep yourselves on mute, thank you. We scheduled this event in knowing that your returns were due a week later, so they are due on the 21st of January, which we'll get into a little bit later on. But the return document should all be available in your employer portal if you haven't already completed it and submitted it. One thing to remember, if you haven't registered your eligible workers as yet, the returns form will not have been able to pre-populate those eligible workers. There are a couple of workarounds in that space, and I'll talk about that in a few minutes as well. History tells us that we don't usually use 60 minutes, the whole hour, for these sessions. So it's likely we'll have some time at the end for some questions and potentially even give you some time back in your very busy days. We're going to walk through each step of the process. We'll show you a little step-by-step video guide and explain what information you'll need to have ready. And by the end of the session, hopefully you'll know exactly how to complete your quarterly return. Unless you've been living under a rock, which sometimes I do, the scheme started on the 1st of October last year. Employer registrations were due by the end of October. If you haven't done that as yet, please do so. I'm assuming that everyone on board today would have done that. The first reporting period between the 1st of October to the 31st of December has come and gone. That's what your return will now be required for all those workers, eligible workers that worked in that period. And lastly, as I said earlier, your first quarterly return and the levy payment for each of your eligible workers is due on the 21st of January. And once you're set up, once you're registered and all your eligible workers are uploaded, your main ongoing task is to complete a quarterly return. And these returns are pretty straightforward. They're generated automatically in the employer portal, and each return is due on those dates you can see on your screen. It's the 21st of the month after the return period. So as you can see, we are currently in the 1st of January to the 31st of March period. So the return will be due on the 21st of April for that period. However, I don't want to jump ahead too quickly because we are still working through the returns for the last period, the 1st of October to the 31st of December. And again, the due date is the 21st of January. When you submit your return, the system will automatically generate an invoice for the levy, and that invoice or that payment for the levy is due on the same day as the return, so you can complete both in one go. Like I said, once your workers are registered, your ongoing task is to complete a quarterly return. Towards the end of each of the quarters, you'll receive an email advising the return is available for you to complete. This is generated by through the portal itself. The return link will be available in your employer portal, as you can see on the dashboard on this slide. If you haven't registered your workers before now, the form will be empty, as I said earlier. There are a couple of options for you here. When you register all of your eligible workers, as part of the worker registration process, our team will be able to add these workers to the returns form for you, or the alternative is you can register all of your eligible workers via the worker bulk upload spreadsheet. We'll then process the registration at our end to add them to your employer profile. And then if you go to the return, you can select add existing worker and add them to the return one by one. So there's a couple of options there for you. On the return itself, you'll need to report your workers, how many weeks they've worked in that quarter and how much you paid them for that quarter, for that period. The system will guide you through it, and it's designed to be pretty quick and very familiar. We've had some really good feedback on how to complete the returns form. Some saying it is easier than they thought and quicker than they thought. So really good feedback around the functionality of the system. When you submit your return, the system automatically generates that invoice for that payment. I'm going to show you a quick step-by-step video. It should have the sound working, although it is the new year and bugs do happen and I'm not on my game completely, but we'll see how we go. I'll have a little bit of a chat about the video after it's completed, but we'll see how we go. All right, just want to make sure I've got this right. Everyone can hear it or not? Mandy? No, okay. Right, let's start this again. My apologies. Again, like I said, it might be just a little bug in the system. All right, let's see how we go now.
Well, since she's not coming back over.
Log into your employer portal. The dashboard will display any pending returns. Returns can also be accessed from the main menu. Open the relevant return. The return will pre-fill all active workers that were registered before the return document was generated. Complete the information on screen. Enter the weeks worked and the remuneration for all workers for this quarterly period.
My apologies. I think we've got another bug. Bear with me. I don't like what's happening today.
The amount will automatically calculate. Click Add Existing Worker to view other workers on your account to add to the return. Select Additional Worker and enter the weeks worked and remuneration. The total will adjust. Keep adding workers as needed. If weeks worked or remuneration is 0, you'll be required to enter a discrepancy reason. If the worker terminated, enter their last day of employment with you. To add a new worker, select Add New Worker. Complete the new worker's details. and enter the weeks worked and remuneration. The total will adjust. Select Submit. You can also bulk upload the weeks worked and remuneration. There are instructions for each column, including a list of what's included and excluded in remuneration. And instructions for adding new workers. Manually enter weeks worked and remuneration. Enter any discrepancies. Or any termination details if applicable. Using the Instructions tab, you can see what is required to add new workers. Enter the details of the worker. The preferred option for email is a personal email address instead of a work email address. Enter the weeks worked and remuneration. Save your file and upload to the portal. An invoice will be emailed to you. With different payment options available. You can also find your invoices on the employer portal.
Okay, so considering we had a few bugs in that, I apologize quickly about that. The good news is that that video works extremely well from our website. It's uploaded on our resources page under step-by-step guides. So if you want to go in and have another look at that without the bugs and me stopping and starting, please do so. We'll also upload, for what it's worth, today's recording of the webinar on to our website as well, and you have another opportunity to look back over that and stop and start the video and work at your own pace. The other thing that I just want to talk about in this, well, what's not shown in this video, is that if you have workers that had one or more weeks in that period or in a period where they did not do any work, that you'll need to upload a copy, you'll need to provide a copy of your timesheets for the period so we can identify when they did and didn't work. So it's really important to understand that if there was a periods of time throughout that quarter that they didn't work in a week. We just need some evidence to show us when they worked, and that is really just to make sure that we are paying the worker, the right rate of pay when they claim their long service leave. It's just really important to understand that if they didn't work at all in that quarter, we don't need anything or any evidence. It's only when they worked a couple of those weeks in that quarter where we do need some sort of timesheet or evidence to suggest that they have worked in those weeks. Right now, when you go to provide some additional information, you can do that through the messaging platform on the portal, or you can do that via email to our email address, which I'll provide to you at the end of the session. Thank you for your patience with that one. I knew that would happen. For some reason, we'd have some bugs. I just want to touch quickly on ordinary weekly pay, or OWP as the experts call it, and that's for service accrued after the scheme started, because it's important that everyone has the same understanding. OWP is simply the amount used to work out what a worker gets paid when they take long service leave. It's not based on their current rate alone. It's calculated as an average of what they earned each week over the past 3 years. And that average covers all of their service. So if a worker has been employed by several organisations during that time, their OWP reflects earnings across all employers and all return periods recorded in the scheme. Next, let's have a quick look at remuneration, because it's directly linked to both the levy and the OWP. Remuneration is basically the gross payments made to a worker for their work. That includes things like ordinary wages, regular allowances, and other standard payments. It doesn't include a bunch of things, including things like one-off bonuses or reimbursements, just the payments that reflect their regular work. And we'll go through that in a little bit more detail in the next couple of slides. All of these payments or the remuneration is based on, I guess, what we use to calculate the levy that you pay and the worker's average weekly pay for long service leave. Keeping this distinction clear helps avoid errors in reporting and ensures everyone's records are accurate. The regulations, which were released in July last year, specifically talk about OWP and remuneration and what's excluded and what's included. And when you're calculating the levy, there are some clear rules on what's included and excluded from an employee's ordinary pay. On the screen right now, you can see things that are included. You'll see that things like annual leave, excluding annual leave loading, things like sick leave or carers leave are included. And also that catch-all down on the bottom right there, that includes anything that is not listed as an exclusion. And we'll just move on to the exclusions now, because it's quite, once you get your head around, it's quite easy to understand what's excluded. And then if it's not listed on the excluded page, we take that as being needed to be included in that that process. So these payments that you can see on your page now are what's excluded from remuneration, and these payments do not count towards the levy that you pay. So things like annual leave loading, superannuation, reimbursements, overtime or hours paid at overtime rates, things like that are all excluded. And if I go back to what I said about 20 seconds ago, if they're not on this list, please take what you're thinking as an included remuneration item to be included. If you've got any questions about that, please reach out. It's a fairly specific piece in the regulations, and we've got some really good support there to help you through any questions that you have. I just want to talk quickly about how workers claim long service leave. Importantly, the workers who have completed at least 120 months of service can either take time off or request a cash payment instead. Leave must be claimed in whole days with a minimum of 1 week per claim. Workers submit their application through the worker portal, but the leave won't be paid until the employer approves the time off. And the standard rule that we're working towards is that workers should apply at least 2 months in advance, but you can agree to a shorter notice period if needed. Payments are also generally made the week before the leave starts, so the worker has access to their pay on time. And importantly, to note that if a worker leaves the community services sector after at least 84 months of service, they can receive a pro rata payment for the long service leave they've accrued. Just want to look at transitional provisions quickly. This is about service a worker has accrued before the scheme started on the 1st of October last year. Any continuous service with an employer before that date carries over into the scheme. That means it's counted towards portable long service leave entitlements. However, if a worker leaves before reaching 7 years with that employer, the service they had before October the 1st is lost. On the other hand, if a worker stays for 7 or more years, the employer becomes liable for a payment for the long service leave accrued before the scheme started. The rate of pay for service accrued before the scheme is calculated under the Long Service Leave Act 1987, so it reflects the old rules, not the scheme's current average weekly pay calculation. Just want to finally talk to you about compliance. Our approach and has always up until this point been very simple. We are here to help. We are here to provide support and guidance. We are not in the stage of penalising anyone. We are here to help you and get you through, I guess, the first process. The goal is to help you understand your obligations under the scheme and to make it easy to meet. I guess if any issues come up, we want to work collaboratively with you and with employers to resolve them. And one practical thing employers can do to make life easier is to keep clear records and documentation of things like registrations, returns, payroll calculations, and all of that type of stuff is going to help you, and it helps us if questions come up, and it keeps everything straightforward for everyone. We know, I guess we've been talking about this for quite some time now, but we know that change can feel a lot to take in and can be a little bit confusing sometimes. So we have quite a lot of support and resource available through every step of the way. First, we've got a bunch of toolkits and information sheets on our website. They walk you through things like the registration, the worker setup, the returns process, and the levy payments. We have recently released toolkit number 5, which will be provided to those on our mailing list, hopefully this week in our next newsletter. We've also run other webinars like this one, which we have recorded and are available on our website to watch. If you've missed out on seeing them, if you've got a bit of confusion around a certain process, go jump on our webinars and watch the relevant webinar to give you a bit of background and some advice and support. We also have specific FAQs for workers and for employers on our website. If you go to whichever page is relevant to your query, those FAQs are listed and are fairly significant. If you see something that doesn't answer your question, reach out and we can help you And the more information or feedback we get in that space, we can adjust our FAQs or add more if needed. And if you need a little bit more help, our customer service team are just a phone call away or an email away. They can guide you through any part of the process or answer any specific questions. And the key message I want you to take away is that you're not on your own. We're here, as I said, to help you. There are multiple ways to get support whenever you need it. As I expected, we generally finish this up in about 30 minutes, and I'm not too far away from that. I just want to remind you all around keeping up to date with information as we release or previous information. You'll see on your screens now a how to stay up to date kind of slide. That QR code will take you to our website if you want to take a screenshot of that now or at any time. Our website is listed there. If you don't like QR codes, you can email us on that email address for any questions or queries, or you can call us on those two numbers below. What I'd also suggest and recommend is you follow us on LinkedIn or on our Facebook pages. We are regularly providing updates. We are posting reminders and news and details about upcoming webinars on these two pages as well as sending out emails to our mailing list as well. That pretty much comes to what I had to say. I know Mandy, and I can see Mandy's been busily answering some questions in the chat, which is awesome. Andy, I'll just pass over to you. Is there anything that we need to raise? Anything we need to talk about more openly or broadly?
There's been a couple of questions about when to start capturing the data from. So what we've said is to start from your first full week of the October period. So if you had workers who started or in eligible roles when the scheme started, then yes, use the first full week when you start your reporting on the return. Ideally, if the whole week falls within the reporting period, you should report it on that return, even if you pay it in the next one, because the worker will be entitled service for that quarter. So that's important that they're getting the service in the quarters that they belong to. But if it doesn't, if they're still getting service for both quarters, then it's okay which one you report it into. If you have casual workers who haven't worked in the October to December quarter, you don't need to add them to the return at all. If they're already on the return, you will report 0 weeks worked and 0 remuneration for them, and then there'll be a discrepancy reason that says did not work, so you need to pop that one on there. Otherwise, I don't think, like, there's just a lot of questions about pay cycles.
Yep.
And uploading the documentation. So the documentation can be sent to us through the messaging system in the portal at the moment. I think in the next release of our system that we're doing here with the supporting documentation will be able to be attached to the returns, but at the moment it's not quite there. So if we can just send it through the messaging, it's nice and secure, super easy. If you're already in the portal, you just need to click on the messages and add your document and send it off.
Excellent. All right, thank you for that. I see Tanya's got a hand up, so I'm assuming she wants to ask a question. Tanya?
I do have a hairy question.
A hairy question?
Yes. So I do portable long service leave, as do probably other people for other states and territories. And we all know all the rules are different in each state and territory. So my question is, if we can go back to the screen that you had about people who had prior service to the 1st of October. So we've got a person who's worked with us for 20 years and she's terminating with us, but she says she's going to another eligible portability employer in South Australia. I'm getting conflicting advice about how to do this. My understanding was that anything prior to the 1st of October that she's accrued must be paid out on her termination pay. And no.
No, so if
And-
the person is registered with portable long service leave when they terminate, then you don't need to pay them out for long service leave because their long service leave is accrued under the Portable Long Service Leave Act. And if the person is leaving the community services sector altogether and wants to claim a termination payment, they'll do that through us. And then if that involves service that was accrued before the scheme starts, we'll contact you and talk you through the process, and eventually you'll get an invoice to cover your portion of the service.
So we need to pay you from whatever date to the 30th of September, basically, separately.
You will need to do that when the worker claims. So if the person is moving to another role in the community services sector and they don't want to claim that leave straight away, they don't have to do that. You just need to hold that liability until it gets claimed. When they do claim, they'll claim through portable long service leave. Then we'll contact you and say, hey, you're still holding this liability and the person's ready to claim it now. So here's what we need to do.
So basically, that covers us for ATO legislation because we've got to pay within 7 days of the final day of employment any entitlements to the employee. Does that cover us for that? Yep.
Absolutely, because you don't technically hold it. It's covered under the Portable Long Service Leave Act now.
Okay, so confirming from now on, every single eligible employee based in South Australia who has prior service prior to the 1st of October 25, we do not pay out any long service leave if they're eligible. Correct.
That's correct.
Okay. Then the onus is on the employee to contact you, and you will then contact us and we'll deal with it from there.
Correct.
Tanya,
Excellent.
just let me jump in nice and quickly there. We would hope, and I know this doesn't always happen, but we would hope that the employee, the worker, would already have been talking to the employer about wanting to take leave. If there's any times, that they're not doing it and they're coming through to us, that we still need to get the employer's approval for that leave to be approved, for that claim to be approved.
Okay, it's just that she's leaving at the end of the month, so.
Yeah, that's okay. I think Mandy explained that fairly well, but
Yeah,
I just
yeah,
wanted
she
to,
did,
it's a good segue as well. We'll be, there's a state long service leave process that we will be requiring all employers to submit information to next month in February, and we'll be providing some information about that in the newsletter. There'll be a webinar specifically tailored to what employers need to do about what information needs to be provided, and just want to make sure that employers understand that that will be happening. Any pre-scheme service will be requested, or information about it will be requested by us, and once we've got all that detail, we'll be able to upload pre-scheme service onto the worker portal, so all workers will be able to see their total balances. Stay tuned on some more information about that one.
Thank you so much for the explanation.
All good, Tanya. Does anyone else have any questions while we're here? I know Mandy's managing the chat, which is awesome. Thank you, Mandy. We got a question around a bit of eligibility there, so I'm sure you can all see that. If there's any other questions that you've got, now's your chance.
There's a quick one that says, if an employee is taking long service leave in October to December, do you deduct this from the balance in February? So if the person, if the employer and the worker have agreed to extinguish liability, which is where the employer has paid the worker directly for long service leave, then yes, you need to deduct that from the totals that you're going to report to us in February when we run this process to update our data. If portable long service leave has paid the worker for long service leave, you don't include any of that on your return.
Excellent. Okay, cool. There's Megan's put in a question there around if she was to close her business in the future, what happens around the liability? And I think, Mandy, you can jump in at any time here.
Yep, I'm going to.
Okay.
Yep. So the answer to that is back to those extinguished liability provisions. So if the business is closing and the employer holds a liability for that worker's long service leave that was accrued before the scheme starts, it's best if the employer and worker can reach an agreement for the employer to pay the worker directly to extinguish that liability. There's a form on our website just to fill in to show that you've done that upon closing the business. And that way the worker's going to get the payment for their long service leave straight up. Otherwise, if you have any specific questions about what happens in that, it's probably best if you email us and talk us through what's going on in the business, because sometimes things are a bit different if there's a liquidation or something like that.
Okay, cool. Thank you. I see Karen's got a hand up. I see that she's put a few questions in the chat. I assume that's what it's about, Karen?
Yes, sorry.
Hello.
I
Oh,
think,
please don't
hello,
apologise. Hello.
hello. I thought it might be easier if we talk instead of me writing it.
Yeah.
Thank you for your replies, Mandy, but just want to go back to the employee where they've got two roles. One's qualifying and one's under education with a separate contract, which means it's non-qualifying. So
Okay.
yeah, their SHAD's role is 100% community services. They get supplied one pay slip even though they've got two contracts. So are you saying that I need to remove their education work before I submit the information into the portal to pay levies? Because that would then mean I need two employee records in my payroll system.
Not necessarily. So
Right.
this is a probably good one to call or email about separately, but since we're talking about it now, let's go for it.
Yeah.
If the person's got two contracts with you and they're separate contracts of employment and there's one SHADS and one that's not SHADS, the SHADS
Yes.
one's definitely covered. You need to report
Yes.
everything on the SHADS one. With the other one though, it depends on what that role actually is. So if the other role fits the definition of supporting the provision of community services, which doesn't have to be covered by SHADS, but is a role that allows someone else to provide a community service, then both roles would be eligible, in which case you could report all of it and everything would get accrued under the Portable Long Service Leave Act. If you couldn't find a way to justify it being supporting the provision, then yeah, you'd kind of have to accrue their long service leave separately under different legislations, which you're right, it sounds horrible.
Yeah, all right. That's what I thought, but we've been reading the Act and all that sort of stuff, and it's really hard to interpret that. So yeah,
sure
thanks.
Is.
Yeah, so I thought I'd pose the question today, seeing we had time, but that's a great help.
Absolutely.
Thank you so much. Yeah.
Is it worth mentioning the voluntary option there, Mandy, as well?
Yeah, so the voluntary registration is where someone is supporting the provision of community services, but maybe not for half of their time, in which case it's not required to register them, it's just optional. So potentially the second contract falls within that scope as well.
Okay, that's good. All right, we can discuss that further in-house. Perfect, thank you.
Thanks, Karen. Okay.
There's a question about from Ellie as well that says that if someone's retiring, they've requested termination pay. So just quickly on claims, if someone is requesting a claim of a termination payment, so that's their whole account paid out to them on termination from the community services sector overall, we can't process those payments until after the person's had their last day of work. You can submit them whenever you're ready to submit them. Workers and employers can submit them whenever, but we can't start processing them until the person has left the community services sector. We say to allow 3 weeks for processing, and we will do it as quickly as we possibly can. We want to give people their money. That's what we're here for. But there are a lot of things that we have to do as part of that process to get those payments made, information that we need to gather. So the sooner that we have that form, and if all the form information is correct, then we can process it reasonably quickly. It just does depend on each situation. So we say to allow 3 weeks because it can take a little while to get all the information if it's not all received with the form, but it doesn't mean it will take 3 weeks. And sometimes if it takes longer than 3 weeks to get that information to be able to make that payment, then sometimes it will blow out a little bit as well. But just so you know, for termination payments, we will try and pay them as soon as possible after the person's terminated from the sector.
Excellent. Hopefully that's answered Ellie's question. Again, let me just say that for anyone that has any specific questions around their specific organisation, you can feel free to reach out to our customer services officers and we can respond in that manner as well. What were you going to say, Mandy?
There's more questions about claims.
Okay, good.
So, yep. And so the worker doesn't need to provide any proof that they've left the sector. The worker needs to confirm on the form that they have terminated, provide a termination date. We're going to check our records and make sure that all of their employment within the sector has ended before we're able to process anything. If they leave one job but they're still working with another one, or they go to another one before we've processed their form, they're not eligible anymore. They haven't left the sector. So it's not that they have to prove that they're leaving the sector, is that they have to have terminated altogether for us to be able to process the payment. The invoice will be issued again as soon as we've had time to process that for you. So we'll be in touch with you to let you know, hey, we've processed this. You're going to get an invoice very shortly that says this much money. And that's when you'll find out about that. Again, within that, hopefully 3-week process, as soon as possible after we've received and been able to process the claim. And the question about what happens if the quarter falls in the middle of a pay fortnight. So ideally, if it falls within the middle, you're going to pay it on you're going to declare it on the return cycle that it finishes in, because that's going to be easier for you to run through the payroll reports. But like I said earlier, if the whole period of work falls within one quarter, but the pay date is in the next one, you really should be including that in the quarter where the work was performed.
Excellent. Brilliant. Thank you for that, Mandy. I think the other thing to be aware of is even if a worker says they're leaving the sector, the ability that we have is they might be reported on against a quarter in the future from other employers if they choose to go to another employer and have told us that they're leaving the sector. So there's other ways to, I guess, find out if they have not left the sector through different reporting systems with other employers.
If the person starts working again straight after we've paid their termination payment, then that's what happens. Most of the time, if a person's claimed a termination payment and they have less than 10 years of service, they're only disadvantaging themselves by doing it that way. So for our purposes, we just need to confirm they do not currently have any employment within the community services sector for them to be entitled to that payment.
Yeah.
I know we don't, there's no penalties or anything really if they do return to the sector after claiming a termination payment, except for the fact that if a person has less than 10 years of service when they claim a termination payment and then they do return to the sector, they need to accrue another 7 years of service before they're entitled to any further payments. And that's basically it. So yeah, I don't know if that answers your questions, Barbara.
No, all good.
So.
You're welcome, Barbara. If there's any other questions, put your hand up or chuck in the chat. I know that we've had specific webinars about claims in particular and others that we've held in the past. So if you're a little bit unsure or you're a bit confused about everything, feel free to jump on our website, jump on those webinars, have a look, have a listen, try and work out what you need to do, and feel free if you are confused or you do need some more help. That's exactly why our team is here, to answer your calls and take your phone calls and answer your emails. So feel free to know that, or you just need to know that you got the support and the help is here if you need it. It doesn't seem like we're getting any more questions, Mandy, and no one's brave enough to put their hand up. So let me just leave you with everyone with the last reminder that the 4 points of contact you can reach us on are on your screen right now. That website and our email address. As I said a bit earlier, we plan to send out a newsletter this week with some new information and just confirming a little bit of information that is out there. If you're not on our mailing list, please let us know if you want to join. You'll get that bits of information through the newsletter, and you can follow us on our social media platforms as well. I'll wrap it up. It's 1:45. You have an extra 15 minutes back in your day to your busy lives. Thank you so much for attending today. Sorry, just one last question that's popped up for you, Mandy.
It says, when will we have information or instructions for opening accrued week long service leave? So we're calling that the state long service leave return. What we wanted to do was get through this first return lodgement before we started confusing everyone with information about a different return. So at the moment, that return is scheduled to go out in early February. There's a guide on our website already, an information sheet in the resources section on the state long service leave return. So if you want to sort of get ahead and have a bit of a read, go right ahead. We will be hosting a webinar just before we release that return as well, so that you can join the webinar, and then we'll have another one a couple of weeks in. But basically the data that you're going to put on it is in a similar format to the normal return that you're going to do every quarter, except it will be just capturing the data about how much long service leave has already been accrued before the scheme starts. So end of January is when you'll sort of start seeing a bit more about that, and early February is when you'll see heaps more about that, and it will be available.
I'm just going to chuck that link into that step-by-step guide for the state long service leave into the chat now. Again, that's just an information sheet for you to have a look at, and like Mandy said, we'll host a webinar just before we open the return for the state long service leave, and double up on that as a couple of weeks later. Okay, I think that's it. So thank you so much for coming along today. Thank you, Mandy, for answering all those questions. If you do have any more questions, reach out to the team. And if you want any more information, jump on our website. Thank you very much, everyone. Have a good rest of the day, and I'll speak to you again soon. Thank you.